Welcome back to Everything Tesla Stock, everyone. The recent economic slowdown that has affected the stock market has been difficult for Tesla, but the cost appears to be leveling down. Despite the recent decline in Tesla stock, the stats remain impressive. In Q1, Tesla exceeded earnings projections by 5%, and the company's overall financial results are impressive. Prominent figures such as Cathie Wood believe that selling your Tesla shares now could prove to be a costly error down the road. Indeed, the rationale is unexpected, but Tesla still has a lot more to offer. This is the reason Cathie Wood says you should never sell your Tesla stock. What, therefore, is her main argument against you selling your Tesla stock? You won't want to miss this, I promise. Before we get started, please click the like button, subscribe, and enable notifications if you enjoy this kind of content so you can stay informed about all that Tesla is up to date on. Cathie Wood, the CEO of ARK Invest, is well known for being a successful investor and a stock market enthusiast. In the past, many investors have won millions of dollars with Wood's flagship exchange-traded fund, ETF, and she is always searching for the next big thing on the board. The CEO previously projected that the price of Tesla shares would reach $3,000 by 2025, but this was after she said that it would reach $4,600 by 2026. It may be argued that given her knack for profitable investments, her subdued cautions might be the investment advice that will spare you from a great deal of regret down the road. American investment management company ARK Investment, situated in Florida, added 3,162 more shares of Tesla stock, valued at around $2.29 million, to its holdings. This comes after a few months of multiple declines in the stock price. Because of Cathie Wood's long-term belief in Tesla, the company's stock has consistently performed well in ARK's portfolio. 3 of the 6 actively traded exchange funds that the investment business manages are used to hold shares in Tesla. ARK has been a significant Tesla stock buyer. It kept purchasing even after the stock fell as a result of manufacturing problems, when the company's Shanghai factory was affected by a Chinese lockout that reduced production. Similarly, it concentrated ARK's portfolio during periods of market turbulence by using its Tesla wins to purchase a losing stock at the moment, as stated by Wood. Though a lot has happened recently with Tesla stock, better days are anticipated, according to Cathie Wood. Elon Musk, the CEO of the EV company, stated that the company's largest production problem at the moment is meeting the surging demand for Tesla vehicles despite the weakening economy. Wood continues to see a lot of potential for Tesla in this area. Based on previous implementations such as Tesla resolving supply chain issues related to semiconductor chips and other hard-to-find items, she thinks there are both short and long-term growth potential. Tesla made a $3.3 billion profit in the first quarter of 2022 despite overcoming a number of obstacles. The output of Tesla and its stock price were significantly impacted by a number of different factors. Shares of Tesla have fallen 39.5%. Without a doubt, the decline has increased pressure on the stock and on Tesla's backers like Cathie Wood. At first, ARK Invest was compelled to liquidate a portion of its Tesla holdings. Tesla fell from the top spot to become the second largest stake of ARK Innovation. Zoom, a video conferencing service, maintained the third biggest holding position, while the EV company, which had been ARK's most heavily weighted allocation for more than 4 years, was briefly overtaken by the video streaming platform Roku. Tesla's share of ARK's overall portfolio decreased to 8.3%, finally putting it below Zoom, which held a 9.4% position. Why, then, did Wood just purchase a Tesla valued at around $2.29 million? With ARK, Tesla appeared to be losing credibility at the moment, but things were more complicated than that. ARK sold part of its Tesla stock, but Wood stated in an interview with Yahoo Finance that she still has a lot of faith in the company. Is it possible to conclude that ARK was being cautious in their game? All oak, maybe. The investment firm has been trading at unusual levels lately, and it is anticipated that investments will be monitored while concentrating some of the highest risk and highest return stocks in one portfolio in light of the massive loss that resulted from Cathie Wood's investment in Teladoc, which turned out to be a huge disaster when the stock lost half its value. Fortunately, Tesla's stock just closed at $725.06, up 1.25%, suggesting that Cathie Wood's bullish prediction about the company might possibly be worthwhile. Although it is evident that Tesla has been dealing with a number of problems, a long-term investor like Cathie Wood, who thinks there is still more to come for Tesla, shouldn't be excessively concerned given the way the firm has been handling these difficulties. Investors can anticipate enormous gains in a short amount of time if they hang on to their stock. According to Wood, the EV market is expanding incredibly quickly. It's difficult to predict what the future will bring, but one thing is for sure: more people will drive electric vehicles in the years to come. There are a lot of occurrences that point to the likelihood that these cars may become much more popular in the future than they are now. The EV industry is anticipated to be driven by a potential move towards battery-powered automobiles in the future. From roughly $287.36 billion this year to $1,318.22 billion in 2028, the market is predicted to rise, surpassing the pandemic-caused decline in 2020. Additionally, it is predicted that sales of electric vehicles would peak in 2022 to 2024 due to the introduction of new models, which should be possible given current government backing and laws. So the issue is, does ARK's sale of Tesla indicate a decline in their enthusiasm for the EV maker? That doesn't seem to be the case, though, given that the business recently revised its $4,600 2026 price prediction for Tesla. Wood projects that Tesla will create and run a network of autonomous vehicles with remarkable sales performance, which would result in a 546% increase in cash turnover over the company's present levels. This is now apparent in a number of the advancements and goals that Tesla has planned for 2022 and the upcoming years. Innovations that Tesla is developing have the potential to take the market by storm and establish an unrivaled reputation in the electric vehicle sector. Apart from the expanding EV industry, Tesla is continuously looking for methods to boost its capital and establish itself as the leading brand in EV technology. Over the course of the last several months, the CEO of Tesla has disclosed a number of distinct tactics that the company plans to employ in order to combat the pandemic's aftermath, rising competition, and a declining market. In a recent tweet, he disclosed that Tesla is developing the third phase of its master plan. In a follow-up tweet, Musk expanded on his predictions for the future, stating that artificial intelligence and extreme scaling, a necessary step in moving humanity away from fossil fuels, will be the two main focuses of Tesla. He also said that a number of exciting announcements on Tesla projects are anticipated for Tesla I Day 2, which is scheduled for August 19, 2022. Tesla may eventually reveal more details about its whole self-driving technology and end its quiet on significant initiatives like the Dojo supercomputers. Given that Cathie Wood has previously said that Tesla's move into the production of autonomous vehicles would have a significant impact on stock prices, she may be delighted about this. But given the volatility of the market, some investors are reluctant to take a chance on Tesla out of concern that the stock price may drop in the future. This is to be expected, as not all investors can resist the ongoing deterioration in their investments. However, Cathie Wood is prepared to wait and hold onto her Tesla shares in the hopes that the value would increase dramatically in the future, much like other Tesla bulls. Wood claimed that most investors are unable to recognize and seize the chance. Therefore, he really used the recent decline to buy more of the company. This forward-thinking investment plan demonstrates Cathie Wood's ability to see far past the present difficulties facing the EV industry and toward the day when Tesla dominates it. She believes that Tesla is only getting started, and we agree. We can only hope for the best that a prominent investor like Wood would make such a bullish prognosis about Tesla. Ultimately, though, the mark